Are you using a fintech company for your investments because you want to get away from the big, traditional banks? If you're a Wealthsimple client, you might be surprised to learn that one of Canada's oldest and biggest financial players is actually its largest shareholder. I'm talking about the behemoth known as Power Corporation. It's a key part of the Wealthsimple story that most people don't know, and it's a huge factor in the company's stability and, well, its wealth. Let's break down the funding and ownership structure of Wealthsimple and why Power Corp is so important. When Wealthsimple first launched in 2014, it was a startup with an idea to make investing simple and accessible. But ideas need money to grow. That's where Power Corporation, or POW on the Toronto Stock Exchange, stepped in. Power Corp is a massive, multi-billion-dollar international management and holding company. Its core holdings are in the financial services sector, including names like Great-West Lifeco and IGM Financial. In short, they are deep within the establishment. In the early days, Power Corp was an aggressive investor. They didn't just write a small check, they became the company's biggest backer through their subsidiaries. This gave Wealthsimple the massive financial firepower it needed to aggressively grow its user base, launch new products like Wealthsimple Trade and crypto, and take on the big banks. So, what is the ownership picture today? While Wealthsimple has brought in a lot of other high-profile investors, like the Canadian Pension Plan Investment Board, global sovereign wealth funds like GIC, and major U.S. venture capitalists, Power Corporation remains the dominant force. Through its various holdings, Power Corporation and its subsidiaries collectively own the majority of the company. This is a controlling stake, meaning they have the biggest say in the company's future. Now, this relationship is a double-edged sword that's key to understanding the company. On one hand, this deep connection to a massive, established financial parent provides incredible stability and credibility. Wealthsimple isn't a fragile startup, it has the financial backing and regulatory knowledge of a legacy corporation. This is why it's trusted to hold billions of dollars in assets. On the other hand, for users who love the disruptor image, it's a constant reminder of the traditional financial system. It raises questions about how independent the company can really be, and what its long-term goals are, especially as it moves toward a potential initial public offering, or IPO. In the world of fintech, the line between disruption and eventual integration is always blurry. With Wealthsimple, that integration is built into the very foundation of its ownership structure. The company is, essentially, a tech startup with an old money financial giant as its primary parent. This mix is what has allowed it to grow so fast and so big in the Canadian market. With that said, thanks for watching and until next time.